Hello traders, Gary Wagner here. Approximately 3 o'clock in Honolulu, 8 o'clock in New York. It is Wednesday, 13th day of January 2021, and this is the daily report for gold and silver. Fractional gains in gold and moderate sell-off in silver is the best way to characterize action in those precious metals today. On today's show, we will revisit our resistance and support levels in gold and silver, and also talk about a stop that we need to place for SLV and GLD. Let's start with gold pricing. Gold had a very tepid day with fractional gains of 50 cents today, with the most active February contract currently trading at $1,844.70. This first chart that we are looking at is simply a line chart split into two with gold futures on the top and the dollar on the bottom. The dollar strength has had a great influence recently on weakness in gold. You can see that right in here where we've had some downticks, and especially right here, this being gold coming down from approximately 1950 to current pricing at 1847. At the same time, we can definitively see that the dollar has been rising in value. And that is important to note when we consider current valuation of gold. We are looking at a daily candlestick chart with a very short-term Fibonacci retracement that really covers this last leg of the rally beginning on November the 30th, going up to these highs at 1962. We are using it to determine what a logical correction point would be before we see it return into rally mode. As you can see, I've got this green line right here. This represents the 61.8% Fibonacci retracement. Although we have had lows and in fact one close that went below it, for the most part, for the last 4 trading days, it has closed above that and above the longer-term 200-day moving average. While a market that is consolidating or trading sideways can have different meanings, in this case, my interpretation is after this dramatic fall, we are witnessing consolidation in the market, which to me is a good thing because the market will typically consolidate, as we saw right in here, before spiking to higher pricing. And as long as we stay above the 200-day and above the 61.8% Fibonacci retracement, I feel solidly bullish and have the belief that we will see gold prices rise in the near future. Remember, tomorrow, President-elect Biden will announce his budget for the next round of fiscal stimulus, and that could really send gold prices dramatically higher. And in terms of our current levels of resistance in the market, they have to come in at this 50% retracement level and just above it, 50-day moving average. That is the area that we need to see gold trade to and close above before I return to an extremely bullish demeanor. We are looking at spot or Forex gold, which is currently fixed at $1844.30. Silver lost approximately 15 cents in trading and is currently fixed at $25.28.5. We are comparing gold and silver in terms of a line chart with gold on the top and silver on the bottom. It's quite apparent that these metals are still trading in tandem. When we get dips in the market, such as right here and right here, we get them in both gold and silver. The only thing that I can reflect upon is it does continue to seem as though silver reacts much stronger in terms of having a greater drawdown, and on the way up, tends to outperform gold in terms of percentage gains. Traders, we are looking at a standard candlestick chart. This has 2 different Fibonacci retracements. The first is the long one that we have been using, which starts at $11.61 up to about $30. And then the second one is drawn in yellow here. And all I'm doing is taking a look at the last leg of the rally to determine if what we've seen as a correction hits effective marks. You can see this red line right here. That is a 61.8% Fibonacci retracement, and that tells me that we had an accurate correction that was fairly deep, 61.8%, and is a strong level of support. The other thing that I find fascinating right now is that pricing is above both the 50-day as well as the 100-day moving average, but on the resistance side, I still see us having major resistance at the 23% retracement level. That comes in at 25.75. Traders, maintain your current long positions in gold futures and Forex and silver futures. Traders, as promised, I do want to cover our long positions in the iShares Silver Trust as well as GLD. Our entry price was $22.95. Currently, we are at $23.45. I am recommending that we place a stop at $21.95 as illustrated on this chart. My upside target that I believe is achievable comes in just above $25. It would be somewhere near the top of this red candle. Traders, lastly, I do want to cover our position in GLD. As you can see, we entered at 172.14. The market is currently trading above that at 173.37. I am recommending that you place your stop at 170.11. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.